Hi, Rob Lukey with Shop Prop Realty. I wanted to go over a few charts. What's going on with home prices? Is this a good time to buy or not? Go over a couple of these charts. I know it looks like a lot, but I won't go through them. I'll go through them quickly. This is the Dow Jones Industrial Average. By the way, I'm only going to be talking about the last 30 years or so. And this is a chart. I'm going to start with the 1990s just because this is where I started in the financial markets. I opened up my own brokerage firm in 96, went through the dot-com boom, the dot-com bust. My firm was bought out in 2006, right before the crash, the Great Recession. And then obviously I started Shop Prop right here. So I've sat through that whole up and down movement. So what I wanted to talk about, I wanted to show this chart because I think it shows you how long the Great Recession was and how steep it was. This was the longest recession we've seen in the last 100+ years. So this is more indicative of what recessions typically look like. Again, over the last 30 years, 30 to 40 years, it's been about 10 months for the average recession. If you go back 100, it goes up to about 18 months. But regardless, we're going to talk about the last 40. This is more indicative of what the data tells us recessions typically are. And this move wasn't the same, even though these look similar. This is the stock market move. The relationship to the home prices, they certainly didn't drop that much at all, right? This is the Great Recession move. This is the dot-com, and this is the early 90 move of the savings and loans in the war. So what's going on now? You can see that we've had this drop off as far as this happened in June. So how long has this been going on? The interesting thing is let's talk first about what about a recession? How long do they usually last? This is a good chart that I wanted to bring up. Here's the Great Recession chart that lasted for an average of about 14 months. Again, that's not the recovery. That's to when we started to recover. Obviously, we didn't recover for actually several years. A couple of years ago, we didn't recover back to the peaks. So this is that's zero barrier, right? So this is the typical move down is somewhere between the 14 and 10% range, with an average recession lasting about 10 months before it gets back up to its zero barrier, where you've recovered from the drop. This recession obviously was steep and lasted longer, again being the longest one. So unless you're thinking that this recession, because I'm saying that the peak happened in June of last year, so unless you're thinking that this recession is going to be something like this, then we may be 6 months, let's even say 4 months into this thing, into this recession. So we might have another 4 months as far as a recession to flat, and then we might start to see a recovery and actually go be at higher prices a year from now. This is the S&P. This is the Case-Shiller for your particular area. This is Seattle, and you'll see that it peaked out here in June, and this is where it has come off to, right? And then if you look at the other areas that we generally deal with, which is the San Francisco Bay Area, also into San Francisco, Orange County, and so forth. Those are things that you can look at. Here's Phoenix, for example. Phoenix hasn't been impacted, but it didn't have the same run-up as Seattle and San Francisco. Hawaii is similar to a Seattle chart, and Washington, D.C., because we're in Virginia now too, is similar to a Phoenix chart. So what's going to happen in the future, right? So here's what the Case-Shiller looks like now, and what they're anticipating is a pretty flat 2019. But into the 2020 level, they're actually expecting it by 2020 to get to about 220 for overall housing sales, and to continue to increase at about 5.5% to 5.2 point average per year. So still a pretty good year. Overall, when you look at this chart, this is nationwide again. We obviously saw in individual areas doing much better, like 12% in Seattle, so and so forth. But this is the national. So national typically has an average of about 4% rate. So we could see it come back down to that level. Also, from a standpoint of just peaks and valleys and so forth, you can see that we draw on a national level. We peaked out in the 2015 area. Some of the and now we've started to see a little bit of a drift back down. I would think that, like I said, is unless you're thinking you're going to see a longer term recession here, that this is probably a good time to purchase real estate for the long term, especially in the areas that we're in: Seattle, Arizona, Hawaii, Virginia, the Bay Area. Could it drop a little bit more, 4 or 5 months, or over the next year before we start to see a recovery? It could, but if we're going to go with the average recession, what the data tells us, and we're not thinking that we're going to see something like this, which again didn't happen since the S&P started collecting data back in the 1890s. This was the biggest drop. So unless we think something like this is going to happen, this is probably a good time to purchase real estate. Remember, with Shop Prop, our goal is to get you the best price possible for your home, whether you're buying or selling, and also get you the most money back when you're buying, and you pay the least amount when your cost to sell your home. Also, just to let you know, we're going to be launching a new search tool that is going to rival any of the other searches out there for our home buyers and sellers, as a way to continue to grow Shop Prop and provide superior service at the lowest cost possible to our clients. Thank you very much. I hope everybody has a great week and a great month, great year. Thank you.